Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the boring stuff and find the juicy details. Today we're diving into Zimmer Biomet's latest report, and let's just say it involves some interesting debt maneuvers. So, Zimmer Biomet Holdings Incorporated, or ZBH as you'll often see them called, is a pretty big player in the medical device industry, especially known for their orthopedic products. Think joint replacements and things like that. They just dropped a report on the 5th of November 2025, and it is mainly about some financial news. This isn't a full financial report like a 10Q or 10K, but a current report on Form 8K. These are usually for big, unexpected events that shareholders need to know about right away. In this case, the big news revolves around their debt. The company has been issuing and likely refinancing different types of notes. We see mentions of 3.518% notes due 2032 member, 1.164% notes due 2027 member, and importantly, 2.425% notes due 2026 member. Essentially, they're borrowing money with specific interest rates and repayment dates. These notes represent the company taking on debt. For example, the 3.518% notes due in 2032 mean they borrowed money that they'll pay back by 2032, and they're paying about 3.5% interest on that loan. Similarly, the 1.164% notes due in 2027 are a different batch of debt with a lower interest rate and an earlier repayment date. And the 2.425% notes due in 2026 are yet another debt instrument with an even lower interest rate and an earlier maturity. While the main focus here is on the debt transactions, the filing also mentions that Zimmer Biomet released their financial results for the quarter ending the 30th of September 2025. This is often included because significant financial events can be tied to the company's overall performance. Their common stock, which is a piece of ownership in the company, is traded on the New York Stock Exchange under the ticker symbol ZBH. The company also has these different notes listed, like the 2.425% notes due 2026, which are also traded on the New York Stock Exchange. This tells us these debt instruments are publicly available for investors to buy and sell. Now, the actual juicy details of their financial performance for that quarter are likely in the press release they attached as an exhibit. This current report is just letting everyone know that the press release is out. The press release itself is Exhibit 99.1. Think of it as the company saying, hey, we put out our latest report card and here it is. So, what is the story here? Zimmer Biomet is actively managing its debt. They're taking on new loans, likely to pay off older, more expensive ones, or perhaps to fund new projects or acquisitions. The different interest rates and maturity dates suggest a strategy of diversifying their borrowing and potentially lowering their overall interest expenses. From a business perspective, managing debt efficiently is crucial. If they can refinance debt at lower rates, it frees up cash that can be used for innovation, expanding their product lines, or returning value to shareholders. However, taking on too much debt can be risky, especially if interest rates rise or if the company's earnings falter. Looking at the different maturities, say the 2026, 2027, and 2032 notes, it indicates a well-planned debt lifecycle. They are not putting all their eggs in one basket with repayment dates. In terms of financial health, what you'd want to see in that press release is how their revenue and profits are doing. Are they growing? Are they able to comfortably cover their interest payments on all these notes? A company that is growing and profitable can handle more debt than a struggling one. Since this is essentially a debt update, the next logical step is to see how these debt activities align with their actual business performance. The fact that they have multiple tranches of debt with varying rates and dates suggests they are actively seeking favorable terms. This is a common financial strategy for larger corporations. They're utilizing the capital markets to their advantage. Let's think about what a lower interest rate really means. If they borrowed $1 million at 5%, their annual interest would be $50,000. If they could refinance that at 3%, their annual interest would drop to $30,000. That is $20,000 saved each year, which is a real win for the company's bottom line. The dates are important. Having debt maturing at different points in time means they won't face a massive repayment lump sum. They can manage their cash flow more predictably. Now, the big question is, why are they doing this now? Often companies will refinance debt when interest rates are expected to fall or when their own credit profile has improved, allowing them to secure better terms. We'd need to see the accompanying press release to understand the full context of their financial results and how these debt arrangements fit into their broader growth strategy. But based on this filing, Zimmer Biomet is making some strategic moves with their debt. They issued new notes likely to optimize their borrowing costs and manage their repayment schedule. So, looking at the broader picture, Zimmer Biomet seems to be proactively managing its financial structure. Their strategy appears to be focused on securing favorable debt terms, which is generally a sign of financial discipline. The risk, as always with debt, is tied to future earnings and the overall economic climate. If revenues decline or interest rates spike unexpectedly, those seemingly low rates could become a burden. However, for now, the moves suggest a company that is aiming to strengthen its financial foundation in anticipation of future opportunities. Alright, that is our quick decode of Zimmer Biomet's latest filing. What is your take on their debt management strategy? Do you think this is a smart move for the company's future? Drop your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate insights. And don't forget to join our Discord community for more direct discussions. The link is in the description. Thanks for watching, and we'll see you in the next one.